Good afternoon, guys and girls. Hope everyone's doing well. Welcome to a new week and welcome to the next weekly market breakdown. What we're going to do today is we've just actually selected between all of us the markets that we're going to look at and focus on for the week, which is DXY, which comes as standard every single week. We've got GBP USD, Aussie Dollar Cad, Aussie Dollar CHF, Euro Cad. I'm also going to look at Euro NZD. And then we've got GBP, Aussie dollar, GBP, JPY to focus on. So as always, what we will do is we will start with the DXY. Just something I want to remind you guys of, and this is quite similar in terms of what happened last week. So as you can see, we had this kind of pullback on last week's candle all the way to pretty much the open of the week before, which was 99.8. And then we actually accelerated and made those new highs of 101.37. Okay, so obviously, as you can see, we're reaching for these wicks here. We're reaching for this liquidity, which is almost a guarantee that we will hit that, maybe even today, if not definitely this week, and maybe even pushing even higher into that 103 region. So what I wanted to remind you guys of is when we have when we're kind of familiar with the trend and exactly what's happened. But we knew from the beginning of May onwards, okay, what we saw happening was the market making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Now, what tends to happen if that bullish market is occurring like this is what we can kind of expect to happen is if we are going to get a retracement, the retracement is going to occur. Okay, the retracement is going to occur on the Monday or the Tuesday. Monday, Tuesday into Wednesday. And then what will normally happen is that Wednesday, Thursday, Friday will tend to continue with that trend. So this is why we have to be very, very patient and wait for the right opportunities to get that perfect buying scenario on the market. Okay. If we look at DXY, it was a little bit delayed. So Monday's trading was this one here. Tuesday's trading was this one here. But Wednesday, we finally had that pullback into the order block, okay, into the order block. And any new members within the group should hopefully be aware of all this already. But we obviously got this big weekly area here, okay, which is where we pulled into, sorry, daily area right here, which is where we pulled into last week, retesting that 100 region. 99.8 was actually the point we got to before we then actually rocketed and made new highs on that candle. And today we're continuing that fashion. So this is a very common occurrence within the markets. You'll find that very, very regularly the market will tend to retrace in the first couple of days of the week, and then it will continue its trend in the next part of the week. So this gives you that opportunity to highlight those areas where the markets could be coming into, and then we can actually look at executing the trades from there. So on the higher time frames for DXY, nothing is changing. There's no reason to be selling this whatsoever. We still are looking for buyers. Right now, it's obviously too high, so we do want to see that pullback. The areas of interest that we're heading up towards will be 102, 103 as well, and then we've got these highs here at 103.8. At the moment, it seems like there's no stopping it, but what we obviously all of us are aware of is that around here, there's going to be liquidity. Around here, there's going to be liquidity. And above here, there's also going to be a lot of liquidity. So again, it depends how strong this dollar wants to be and how long this strength wants to continue for. But clearly, we are still in that bullish move. So if we were to look for an opportunity on any dollar pairs, we want to see the DXY pull back probably at least to last week's high. Okay, at least to last week's high. Okay, which will be this region right here. So 101.31 is roughly speaking where I'd like to see that market pull back into. I'm not too sure why that's moved there. If we have a look at areas of interest on the daily time frame, we've also got this kind of level here, which is the order block, okay, because this one is way too high. But this is essentially the order block, and we also have the wick of this candle here. So this would be a nice area as well. Again, if we did find some pullbacks into this region, we could see us wick into here before actually continuing that trend. But that's where the opportunities are going to lie, below this 101.32 level, all the way into that 100.5. Okay, and then we'll be looking for those long positions. No need to go on any other smaller time frames at the minute. If we looked at the 4 hour, Let me just delete that, sorry guys. If we looked at the 4-hour, we obviously do have this kind of this level here as well, which again, you know how I draw these now, is the lowest point of the trend if it's an uptrend and the last bearish candle. So I would highlight these two. Unless this candle is a little bit too big and it comes all the way up here, then I would just highlight this one. But otherwise, this is a nice level here as well. So that's what we're looking at DXY. So that would be some nice opportunities if we can get down to these levels to actually then go long, start pushing up towards that 103 level on DXY. So DXY, we are going to be bullish. Okay, we are going to be bullish on DXY. So that means if we have a look at GBP USD, what can we expect? We can expect that the market is going to continue falling, and it's already falling very, very hard. So this could be difficult to find an opportunity. Where are we reaching for? What are we targeting? That's the first question you need to ask yourself on these higher time frames. Okay, on the weekly time frame, what are we reaching for? Now, the first thing that comes to mind for me is we've got this liquidity here, okay, which we're kind of in right now. The second thing that comes to mind is we've got this area right here, which is that previous order block that hasn't yet been tapped into. We've also got this kind of area here, which if I wasn't on a weekly time frame, there would probably be a nice order block there. So we've got a lot of downside potential for GBP USD. But what we do have to do is make sure that if we are going to be selling this, we find that area of value. Okay, where it is right now is not an area of value. Okay, you are selling at the bottom, and if you're selling at the bottom, you will get taken out if there is any impulse move to the upside first. For example, if what happens if the markets do end up retracing at one point this week, whether that's today, tomorrow, or Wednesday, then you'll be caught out because you've sold way too low. Okay, so just be careful when you're doing that, and make sure if you are doing it, then just like Jordan in the group, he has his targets set nicely. They're not too ambitious, and they're sensibly done. Okay. So we've got on the daily time frame. Again, really, really hard to find an opportunity here because the last area of interest, the last order block on the daily is this level here, right? Which is almost 300 pips higher. Okay, 300 pips higher, which in all honesty, I don't know whether we're going to get that big of retracement this week. So what we'll do is we'll just keep going down in the time frames and just see if there's anything we can see. So 4-hour time frame. Nothing, just clear bearish momentum ever since I think that's Friday. Yeah, ever since Friday morning, just absolutely dying. If we go on to the hourly time frame, we will have a couple of little bits, a couple of little areas which could be interesting. The first one, in my opinion, would be potentially this one. Now, again, because this last bullet, this is a bearish trend, right? So again, what are we looking for? We're looking for the highest candle and the last bullish candle this time, because it's the bearish trend. So because of that, this one for me is too big. Okay, this candle is too big. Okay, so I would be highlighting just this one. Okay, so that would be one area, so 1.29. Okay, so if we do get pullbacks up to that region, we can definitely expect some potential bearish momentum. And then in here, a little bit choppy for my liking. Again, this one here, last bullish candle and the highest candle before that nice little push to the downside. Again, it's always got to be that push to the downside. So for example, question might be, well, why don't we have this order block right here? Okay, and it doesn't mean it's not valid, but the point is there's not really a solid push to the downside. And one of the main reasons for that is because it's quite late in the evening. Whereas this one here actually was the top of the move before a solid push to the downside. Okay, just like this one here, we've got the last bullish candle, which is here, and the highest candle, which is the same candle. This here becomes our area of interest. Okay, so we've got a couple of little areas of interest there. One of them is about 100, one of them is about 80 pips away, one of them is about 100, 120 pips away, and the other one is quite a lot further, about 180 pips, something like that. So if I was to be looking at selling this market, it's going to have to be one of these three regions. Otherwise, in my opinion, it's too risky. We're too low. And if we also draw the Fibonacci on, And again, you guys know that I've slightly amended this now to just show the 0.5, 0.5, and sorry, not minus. If I just do that in orange, that'll do, and then I'll close these things off. Okay, so what we can see here is the area of value of this entire leg right here pops in quite nicely around our 1.28 level. Okay, so it would be nice to see the market come back up here, even this one here, and that kind of goes in line with where the orders have come in so far as well. So it will be looking for 1.28 sells on GBP USD. Okay. So GBP USD looking for short opportunities and looking for short opportunities from these levels here. Okay, so got another little tool in here somewhere. So I'm just trying to find yeah, just this little price note, just so that we've got an idea of what the price is that we're looking for. So we've got 1.27997. We've got this area as well right here, which is 1.2827, and then obviously we've got one more, which is this 1.29 level as well. So they are the important areas, okay, on GBP USD that we'd be focused on this week. I'm going to delete that because that's kind of in my head anyway. So anywhere here would be good to look for opportunities to sell. So let's have a look at Aussie Dollar Cad. So let's jump onto the weekly time frame. It's on the hourly at the moment. Let's delete everything that we've got going on here. So on the on the weekly time frame, okay. Now, again, first question you always ask yourself is, what are we reaching for? Okay. Now, the first thing that's slightly not worrying, but just needs to be marked on, even though as we can see we have bearish momentum and bearish pressure, right? We just do need to be aware that this here is a break of structure. Okay, so this here is a break of structure, right? So if it is now a bullish scenario, what would we be looking at? Okay, we'd be looking at the market coming back to this level here, right? Because this level is the last bearish candle and the lowest candle before the push and the move to the upside. Okay, so that there is going to be our order block. Okay, so that's one thing we just need to be aware of. So when I say what are we reaching for, we are definitely, okay, well not definitely, but a high probability that we are going to be reaching for 70 pips to the downside at least into this 9058. Okay. Now also what we can see is where this is rejected up here was from this order block. Okay. And again, last bearish candle and the highest candle. Sorry, last bullish candle and the highest candle, which is this one here. So this is kind of, if we drew another break of structure on, and this is what I always do in my head at least, is I make sure that I'm just aware of both scenarios. So for example, I'm more than happy to be short in this market. I'm not going to be looking at long in this market at all. But it is just something to be aware of, that we have this break of structure and we have a potential look at pulling back into this 0.9 level, and maybe we could find buyers and actually make a new high. So it's just something to be aware of. So we've got that break of structure there for the low. We've come back, we've made a new low and then pushing down. So our next kind of area of liquidity or area of interest is going to be just below here. Okay, so if we are going to continue that bearish pressure and move to the downside, then what we're going to see is we're going to see us forget about the order block that we got here and just keep pushing over the next week or so. So as you can see there, both scenarios are kind of drawn out. Now, what do I personally favor? Because of this momentum to the downside is just strengthening, I still favor the short position. So I'm not going to be looking at a move like this. Okay, I'm not going to be looking at something like that. I'm going to be looking at continuing to trade the trend and actually look at taking that to the downside to 0.9 and maybe even further over the coming weeks into 0.89 as well. If we go on to the daily time frame, again, we're quite low at the moment. Okay, so again, you just need to be careful when you're actually doing this, because again, the problem with selling something here is if you look to the left, we are going to have order blocks, okay, which could shift the price to the upside first before continuing that downside move. So, and you don't want to get caught up in that move and stopped out because you've been selling too low. So on the daily time frame, we've obviously got an order block up here, but again, it's quite far away. So we're going to have to see if I remember correctly. 9280, yeah, this is what I thought. So Zena was looking at this at 0.9280, okay, and that is exactly this order block right here, which is spot on, okay, which is spot on. Now again, it's quite high, and even Zena said herself that potentially she doesn't necessarily think that will get there, and that's very, very true. So what I would do, okay, is I would just go down onto the 4-hour time frame and I'd have a little look. So this one here is covered, okay, because we've already picked this out on the daily time frame. So we've also got one, okay, we've also got this one here, okay, that last bullish candle and the highest candle before a decent move to the downside. So we could, okay, we could get an opportunity around here, and again, it's a nice round figure, 9250. Okay, so we then got, if I just put this on again, we then got sell opportunities at 9250 on Aussie Dollar Cad, and we've also got opportunities at, roughly speaking, 93 as well. Okay, so that will be what I'll be looking for on Aussie Dollar Cad this week, pushing into at least this level and hopefully even this level down here of 0.89. So retracement Monday, Tuesday, Wednesday, whatever it wants to be, up into here is our perfect scenario, and then actually looking at shorting that market down to 0.9050. Okay, Aussie Dollar CHF. So Aussie Dollar CHF. Let's just jump onto the weekly time frame. Let me just have a look at why I had that highlighted there. See, look, this is a spot on position for a sell there for a swing trade on a 4-hour time frame. So if you look at the supply and the demand of this area here, this was the BOS. Okay, this was the BOS. This would have been a major BOS, but we didn't quite meet that. Okay, we didn't quite meet that. But what we can see is actually the market then did what we call an inducement. Okay, an inducement is where the market is manufactured to kind of create what looks like order flow in the opposite direction. So for example, these equal highs that were created here, people would have been like, right, okay, we've rejected this level, we've now got a double top or whatever you want to call it, and off we're going to go down here. And then what happens? The market flings back up, takes out all the stop losses, okay, takes out all of the stop losses, which will be sitting in this kind of region here. Yeah, takes out all these stop losses that are sitting in this kind of region here. And then we find the order block, which is where the sells began, which is where the sells came into the market. And then we have a huge move, absolutely huge move for a market like Aussie Dollar CHF, which once you start seeing, when you're in this region and you start seeing the bearish pressure come through, which is probably around, I'd say this candle here would have been where it started. We're talking about a 200 pip move on Aussie Dollar CHF, which is absolute madness. So yeah, really nice setup and scenario there as well. The other thing again is just looking. I'm just showing you guys this as well. So again, I show you this so much because this needs to be gelled in your head. So what have we got here? We've got a push to the upside and a new high created, right? Where did that move begin? The move began here, right? The last bearish candle is this one. To me, that's a little bit too big. Okay, it's too big a candle. And the real move is the wicks here. So if we went down on time frames, the real move would be here, right? So this is our order block. What happened? Because we made a new high, we came back into that order block, and then we pushed and made yet another new high, only just, but we did push and make another new high. What happens after that? Because we made that new high, we have the last bearish candle and the lowest candle, which is here. So my highlighted order block would be around this region. And again, I'm sure you can see this, but what happened? We then pulled back into this region here before we then pushed up, made some bullish order flow, and actually all the way into the high again. So this is why I always say to you that when you get within that region, normally it can just be the high if you're expecting that bullish momentum to continue. But what's the sensible way to do it is to actually pick the last order block on a solid time frame, whether that's hour, 4 hour, whatever you want to use. If you pick the last order block, if you actually bought this market here, okay, if you bought this market here after seeing bullish pressure come through on this is a 4 hour time frame, and you had your stop just below the low, so that's 24 pips, and we'd add a couple of pips on there as well. Bear with me 1 second. Yeah, add a couple of pips on there as well. And then obviously if you target, as I say, always target the high, and you can take off. What I tend to do is I tend to take off, I make sure that I've taken off about 75% of my position once I've reached that high, okay? Because whatever happens after there is just a bonus, okay? I'd rather have the majority of my profits taken. So for example, on this one, if you had one lot on, roughly speaking, you're talking about $1,000 in profit. So taking 750 and leaving the other 250 to run for hopefully making a new high is at least you've secured that 750. And then what I'll do, as you guys know already, is then I trail my stops underneath the 4 hour lows, okay? Or maybe even sometimes the 1 hour lows. But that means then you can be out of the market here, but you did have the potential if that new high was going to be created. Anyway, so all I was trying to show you here really is just the order flow, okay? New high created comes back into this previous level. New high created comes back into this previous level. This one here did not create a new high. So because it did not create a new high, it came into this order block. What's the chances of the next move taking out the low, at least getting to the low? That's a very high probability, okay? And that's what you need to do within your trading, okay? Anyway, back to the weekly analysis for Aussie Dollar Chf. Okay, so we've stalled a little bit. Okay, we've stalled at 0.7. So it's quite a tricky market actually. So thank you very much, Zenat, for giving me this one to have a look at. So first of all, I'm going to look at the two things that I do when I'm looking at a weekly time frame. Is number one, where are we potentially heading for? Where are we reaching for? And also, what have we rejected from recently, and why have we rejected from those regions? So what were we reaching for? We were clearly reaching for this kind of 0.71, this 0.7 level. And also, if we look at where the rejections were coming in, it's this level right here. Okay, this level right here, because we have the last bullish candle and the highest candle, and then we had significant momentum to the downside, right? So that's where we've managed to reach. We also took out any liquidity that was above these levels here. Okay, so yeah, any liquidity that was above these levels here as well. Okay, so with this market, we've kind of potentially reached the objective of pushing up on this market and grabbing the liquidity. Now, these wicks coming in here quite strongly is potentially that sign, of what was previous bullish order flow now potentially turning into, so what we've got is we had the higher highs, higher lows, but then what we've begun to have after that is we've had kind of that change of structure, and then potentially this. Okay, so this is what we're seeing here on the weekly time frame if we were to go down on the lower time frames, which I'll show you in a minute. So that is called basically distribution. It's when when the banks and the institutions are actually offloading their positions, you should be able to see it in terms of the order flow. And what we've seen so far this week is we've seen that bearish move push lower than last week's candle, signifying that the sellers have potentially taken control. Now, if the sellers have taken control, the long-term weekly target, okay, the long-term weekly target is going to be this kind of level down here. Now, again, just be careful because we have made an ever so slight new high. And because we've made that ever so slight new high, we do want to be aware of that. So that means this order block could come into play. So rather than just focusing on the liquidity underneath lows, we do need to be aware of this order block. But that does mean that we could be heading from 0.68, which is where we are now, all the way down to 0.66 at least. Okay. If we go into the daily time frame, here's that kind of sign of that order flow. Okay, so we didn't have the break of structure, but we had that kind of equal low created, and then we had here, which was the key point here, which was the failure to make the new high after new highs have been made for months. Okay, so the first failure to make that new high, and now a rejection, and now a break of structure. Okay, now a break of structure, which is here. Which is here. Okay, so we've also broke structure here as well. As you can see, we broke structure here as well. So looking like the bears are finally coming into control. If I go into the 4-hour time frame, you'll probably see something very similar here to Aussie Dollar Cad, which is, let's look at the last highest bullish candle in here. And boom, what's happened? We pulled up into that region, and then that's where we've sold off from. Okay, so this week we're going to have to favor the buys. We're going to have to also be aware of that the liquidity that we're in right now. Okay, so we have pulled into an area of liquidity, and this is why selling too low is never a good idea. Okay, this is why we always need to think about the value. Okay, because under here there's liquidity. Okay, and what that means is when the market comes up underneath here, we could pick up buyers, which is potentially what we're doing now. Okay, which is potentially what we're doing now. So what we want to see, if we want to get and join on this trend, on this time frame, there's nothing really in terms of order blocks unless we were to go all the way back up here. We have this kind of little one here about 7020. Otherwise, what we're going to have to look at is we're going to have to look at previous demand. Okay, so there's one area of previous demand here, which is where we pushed up from. And there's also this big candle here, which to be honest is too big for my liking. So I'm just going to stick to this. So what I'd like to see is the market come back up into this region if I was going to look at sells. And I believe that it probably will do because we are in an area of liquidity now, which could shoot the market back up into these levels. And also when you're on the 1-hour time frame, you can see that we've got quite a lot of order blocks around here. So we've got this one. We've also got one a little bit higher up about here. So there's definitely somewhere around here, sellers could potentially get involved, okay, and that would be the best opportunities to be looking at shorting that market, okay. Let me just have a quick look at what Zena had mentioned to me regarding Aussie Dollar CHF. BOS, which is what I've just said. The wicks on the dailies this week haven't been as high as the previous week. The closures on the dailies this week were higher than last week. Let's have a look at the daily closures. Yeah, so I mean, the main thing here is that the selling pressure has really switched on. Okay, so all we have to worry about now is, well, not worry about, is just be patient and hope that we come back and retest. So we've got that big daily area, which was previous demand here. So this whole area here is going to be that selling zone. Realistically, we shouldn't be coming back up really to 0.7, but we'll have to wait and see. And then what we can do is we can expect the market to move to the downside, and we can actually look at areas such as this liquidity here. Okay, and that would be our first target per se. So that is Aussie Dollar CHF. Let's jump on to Euro Cad. So Euro Cad last week, really nice entry from a trade, which is, I think I showed you guys this one. But as we can see, we actually failed to make that new low. Okay, and what we did is we came back to this area of previous supply. Okay, that's where we came back to, the area of previous supply, and then we actually flipped and reversed really strongly because Euro was quite strong last week. Let me just delete everything. And let's just jump onto the weekly time frame. And on the weekly time frame, again, this is going to be a difficult one. So let's have a look first. So CAD CHF is bullish. Okay, so CAD is bullish on there. CAD JPY is also bullish. GBP CAD is falling. So CAD is quite strong right now, which is going to help us favor that CAD Euro CAD to fall. Now let's just have a quick look at Euro. So Euro was bullish last week against Euro Aussie. Euro GBP was bullish last week. Euro JVY was bullish last week, and Euro NZD, I'm guessing, will be the same. So for me, Euro CAD is a very, very tough, difficult market to be getting involved with, okay, because potentially Euro is strong and potentially CAD is strong as well. And that's probably why we're kind of seeing that stall and slowdown on this market, okay. It's very, very low as well. It's grabbed the liquidity, or it's in at least in the area of liquidity from these levels here, 1.38 to 1.36. And last week we had that rejection. So this is going to be a very risky one to trade. Very, very risky one to trade, because obviously we are in a bearish move, but we are now kind of picking up steam really on this Euro. So I'm gonna throw something out here and actually say that I think potentially you might see some bullish moves from this. Okay, so obviously we've got breaker structures. We're still moving to the downside. We're in an area right now on that daily time frame, which is potentially the perfect opportunity for shorts. But there's something about that weekly time frame, just this kind of real slowdown in momentum. These wicks creeping in at 1.36 every single time. 1.36, we have a look at 1.36, right? 3 weeks in a row now, 1.36 says no, okay? And one time we got all the way down to 1.3520, which was last week. And as you can see, how hard did we bounce back up from there? Literally within 2 days, boom, boom, okay? So I personally think that we might be in for some bullish movements on EuroCAD, okay? Again, it's a bold call. I'm not recommending trading it as such. I mean, what I would do in this situation is I wouldn't trade this market at all, because I think it's very hard to call. But what I would do is just highlight these areas here. Okay, this is the order block. So if we do come back into this level, that would be the nice opportunity for your long positions. We've got liquidity above here. We've got liquidity above here as well. If we go into the 4-hour time frame, because you see as well that we've got, again, there's no wrong or right answer. The market's going to do what it's going to do. But you see we've got this kind of breaker structure here. And then if we were to consider, we could consider we've got a second breaker structure here. If we also were to consider it, we could consider we've got another breaker structure here. So the buyers are really looking at taking control. Okay, we've got 4 potential breaker structures on to the upside. Okay, so I think personally that I actually really do prefer the long positions. Okay, so I'm going to delete this one so it's clearer. I think we'd be more inclined to see long positions and pulling up to this level here, okay, which is 1.38, which where it is now is about 120 pips or so. Where would we buy from? Okay, so we've got the only thing we're probably going to find, so this wick here, there's going to be an order block here. Hopefully it's on the 1 hour time frame, because otherwise anything lower than 1 hour I don't really use. So as you can see there, we've got a very big candle, and then we've got the lowest candle and the last bearish candle, which is there. Okay, so on the hourly time frame, we've also got this one here, which kind of is the same as this one here. So I would actually be looking at long positions, and I'd be looking at long positions from this kind of region here, simply because we're breaking structure everywhere. So I think the tables might be turning on EuroCAD, but let's see. Okay, so that's what I'm thinking for EuroCAD. GBP Aussie was the other one that you guys wanted me to do. Again, tricky. So I'm sure that the reason why some of you guys have asked me to do these because they are quite tricky. So what we're seeing, first of all, we're seeing liquidity / breaker structure. So we've got the lows taken there and no closure below and only bullish movement up. On the weekly time frame, we've obviously broken structure here as well. So we've broken structure there, and we've potentially broken structure there. If we look at the daily, I mean, obviously this market is bearish, right? So we want to, ideally what we want to do is be trading with the trend. It's just that last kind of week or two is what's becoming a little bit risky when it comes to making a decision. Okay, the thing is, we've got so much bearish pressure that this bullish pressure for me isn't enough to consider that buyers are actually in control. Also, if we look at other GBP pairs, the majority of these pairs are actually falling. So you can see the last couple of weeks, this week and last week, big rejection, sellers coming in. Bit stagnant on GN. GCHF is big rejection, sellers coming in. So I think personally I would favor the downside. So let's have a look at where the order blocks are and where we could find good opportunities on this market. So first of all, I mean, this is our daily level / order block sort of area right here, which we're already wicking into at the moment. The second one on the daily is here, which is kind of roughly where that break of structure is. Okay, this is obviously quite high up, no, probably very high up. And then if we just go on to the 4-hour time frame, yeah, these are very tough because you can even see here as well that we've got bullish order flow right now. So we need to see that bullish order flow change first. So we need to start seeing break of structures to the downside. So in my opinion, it's going to be anywhere around this level, 7.8, 7.9, maybe even 1.8. I mean, the market's moving so much right now. Even since this morning, we've moved up 100, 150 pips and then back down 100 pips. So the market's moving a lot at the moment. And I would personally favor the downside, but I'm only favoring that downside when I see that break of structure, when I see the order flow changes. Because right now the order flow is completely opposite to shorts, it's long. And therefore the longs could push us all the way into 1.81 for all we know. So I prefer shorts. Obviously, bear in mind that your first target on an hourly time frame is going to be here, which is 250 pips, which is massive. That's your main target. You then have here as well. If you're looking for breaker structures, you're probably going to need this here is probably the key one, okay? Because what you've got here is you've got the last area of demand before a high was created. So that's the one that needs to be broken, retested, and then we look at those shorts. So from 1.77 all the way down to 1.75. That would be the ideal scenario. Yeah, that would be the ideal scenario. So that's GA. If we look at GJ, the last one, so I think all the JPY markets are kind of chilling out a little bit at the minute. Just delete this. Yeah, I mean, I personally don't like a lot of these markets that you've given me. GJ, nah, GA is okay. Euro Cad, don't like that at all. But yeah, GJ, nice rejection from the 1.68 level. Potential for that kind of evening style pattern. On the daily time frame, we've also broken this area here, which is the last area of demand, which pushed us up and made that new high. So that kind of, again, signifies that, you know, potentially we're looking at short positions. We've got the lowest candle and the last bearish candle, which is here. Okay, off of this move. That's in the 4-hour time frame. So if I was doing anything on this market, what I would be doing is I would be looking for somewhere around here, 1.6450, 1.65 to look for short opportunities, because GBP seems to be weaker in most places. Highest candle and last bullish candle, which is this one here, roughly speaking. So we've got that 164.5, so we'd like to see that. And also then we've got these areas right here as well. So we've got the order block here as well. So anywhere around here, I'll be looking for short opportunities on GJ, okay? Again, this is just technical analysis, this isn't fundamental. Anything can happen at the moment with what's going on in the world, as you guys know. But what I'd like to see is coming back into these regions and then actually looking for those sells to actually make that make that next low essentially. So guys, I hope you find that useful. I think I've covered pretty much anything. I didn't go through gold this week. Let me just have a quick look at gold. So yeah, last week not what I expected at all. Not what I expected to happen at all. Where is it? So as you guys know, I was looking for it around this level to actually come and pump back up, but it just didn't want to happen, and back down to 1905 right now. Again, if we go on the weekly time frame, what's the first thing you ask yourself? What are we reaching for? So we are rejecting these levels. We are now in liquidity. We could be reaching for the previous point that it broke out, which is about 1850. Okay, we could be reaching for there. We could even be pushing and reaching for these lows again here. What we do have to be aware of is this kind of like higher low, higher low, higher low, higher low, higher low. So maybe another higher low could be created here before we push up again. Again, I don't try and predict anything by just making guesses like that. All I'm doing is looking at what the market is telling me. So last week was nice and bearish, big bearish engulfing candle, and this week now we're pushing into these lows. So if I go into the daily time frame, we're actually already taking out this liquidity here, and we're taking it out quite strongly, which kind of leads me to believe that we're not just going to reject this and bounce back up. Okay, so I think that the first point on the daily time frame that we would be reaching for is around this level here, which is 1886. Then we've got obviously order block here and this level that I marked out, and then we've got liquidity here. So I'd be definitely favoring downside moves, continuation of this trend. If I was going to enter it, the only place that I would look at entering it is probably somewhere around this level here, okay, which is a 4-hour little block just sitting in here right now. And then if we wanted to refine that, we would refine it to this area here. So 1916 to 1920, looking for short opportunities on gold. So guys, that should be everything. Any questions you've got, let me know. Keep sending through your charts and your trades, because it's great to see all of you guys working together, and also all of you guys smashing it as well. So keep it up, and obviously as well, if you're on the website at all, let me know if there's any issues, because I've recently changed everything, not necessarily on the members side of things, but just on the main pages. There's also a very nice review from Fungi on there as well, which I'm sure you guys will find if you click on the packages page. And there is also another one coming up for Xena as well. So guys, thank you so much for doing that for us. I really do appreciate it. And obviously, if you've got any questions, let us know. And also, if anyone else listening or watching to this is able to provide some feedback on what we offer, it doesn't just have to be good feedback, can just be what you want more of, what you want more out of myself and Yasser. Just let me know. And yeah, have a great week, guys.